Coming up on Business Incorporated, Ghana's commercial debt gulps 42% of country's external debt. Botswana's state-run diamond trader reports record revenue on diamond demand surge. Moroccan authorities extend water rationing measures as drought hits. Great to have you join us on Business Incorporated. I'm Ladi Williams. First off, let's look at how the markets are doing at intraday, starting with Africa, where investor sentiment is mostly in negative territory. Nigeria's main index was still green from yesterday. At intraday, it was up marginally by 0.03%, while South Africa's GSE FTSE index fell by 0.66%. Similarly, Egypt's EGX 30 stumbled about 2%. And intraday, while Kenya closed the Monday session positive, up by 0.04%. Meanwhile, investors traded with mostly positive sentiment in the Middle East. The Abu Dhabi and Dubai indexes traded in opposite directions. The Abu Dhabi index was up by 0.38%, while Dubai's index traded lower by almost the same margin. On the flip side, both Saudi Arabia's and the Qatari indexes recorded gains. Both indexes were up 0.79 and 0.16% each at intraday. And heading on to Europe now, it's all about Russia-Ukraine, as Moscow has just recognized two breakaway regions of Ukraine, Luhansk and Donetsk, as independent states, and the West is reacting with fury. Let's hear more now from Rob Watts right there in Berlin. So, Rob, the West is already applying economic pressure, after Russia's decision to recognize two regions of eastern Ukraine as independent. What measures are being taken?
Well, the use of economic force against Russia and Russian interests began almost as soon as Moscow made that declaration. US President Joe Biden signed an executive order prohibiting any new investment, trade or financing by American companies or institutions in the breakaway regions, effectively banning Americans from putting any money into them. To be honest, there probably wasn't an awful lot of American money going into those areas anyway, but it is at the very least a statement that the US is prepared to act. And the White House says these measures are separate from and would be in addition to the swift and severe economic measures that would be imposed should Russia further invade Ukraine. We've also been hearing from other Western powers. They've made clear that they also intend to react to Russia's recognition of the independence of Donetsk and Luhansk with immediate sanctions. The EU has called it an illegal act and says it is going to impose sanctions. It'll decide on those during the course of Tuesday. The UK is also expected to announce new sanctions during the course of the day. But these are all likely to be separate to the much deeper sanctions being prepared should Russia send troops further into Ukraine.
And what shape could, further sanctions take?
Well, Western allies have been discussing a whole range of sanctions. Many of them are economic. They're threatening, for example, to kick Russia out of the SWIFT payment scheme, which is the global system that enables banks to send money to other banks in different countries. That would effectively end Russia's ability to send and receive money from abroad, something that is obviously key to a country that relies heavily on exports, in particular the exports of oil and gas. The US has also said it could cut off Russia's access to US dollars. Major dollar transactions are cleared through the US financial system, so the Americans would actually be in a position to block those transactions. As for the sanctions being threatened by the EU, for example, it's quite possible that they will include measures targeting the Nord Stream 2 pipeline, which is ready to begin delivering Russian gas to Germany. Germany's under an awful lot of pressure to suspend the approval process for that pipeline, and the German government has said that nothing is off the table. Effectively, stopping the certification of Nord Stream 2 would cut off a major future source of income for Russia. And just remember that this is a country with economic problems as it is, having gone through a particularly prolonged recession during the pandemic.
All right, and major markets are rattled right now. How's the markets in Europe reacting?
Well, as we discussed yesterday, markets have been rising and falling as the tensions over Russia and Ukraine have been falling and rising. And now, with conflict seeming probably more likely than at any other point in this entire crisis, we have seen the same reaction. We've just seen European stocks tumble. They started trading around 2% lower than they had the day before, following on from markets in Asia, which had their worst day this month. Russian stocks have also slumped in particular. We're seeing investors seeking out safer ground as well, with the price of gold climbing, also the Japanese yen, which is also seen as a safe haven, gained as well before walking back those gains. The price of oil is rising on fears that Russia's exports could be disrupted by all of this controversy and any sanctions. Brent crude, for example, gained more than 2% in price, hitting its highest level for 7 years as it approaches the $100 a barrel mark. Meanwhile, there was also a milestone for the Russian ruble, which crashed to its lowest value for 18 months. So we are definitely seeing developments in Ukraine really resonate around the world.
Right, just oil markets looking good right now. All right, Rob Watts, thank you so much for that information there. All right, now heading on to the UK, we see the UK recorded its first fiscal surplus since the start of the pandemic. Let's hear more now from Juliana right there. Great to have you, Juliana. So that's almost that's about £18 billion surplus right there. It's good news, I guess.
Yeah, quite good news. It just goes to show that the self-assessment taxes that were due in before the end of January have really helped boost the government coffers. It's actually in surplus by £2.6 billion, which is below economists' forecasts. I believe they had put a figure to about 3.3 billion, but it's still a major gain if you compare it to 2021, when I believe there was a deficit of about £2.9 billion. However, we've got to look at the big picture here. If you go back to January pre-pandemic, which seems like 100 years ago, the surplus was about £10 billion. So I think there's a little bit of cautious optimism by Chancellor Rishi Sunak, who applauded the fact that there is finally a surplus. This is the first time the Office for National Statistics has shown that the government borrowed less than it gained since the onset of the pandemic in this country in March 2020. But there is still a long way to go, and it does put more pressure on the Bank of England when they meet in Threadneedle Street next month to rise interest rates so they can curb back inflation, which means that the government debt will sit lower, currently standing at about £2.3 trillion, which is 98% of GDP.
Quite interesting. And I see London-listed Russian companies have suffered heavy share losses in recent hours. Does this have anything to do with the geopolitical tensions right now?
Well, absolutely. The geopolitical tensions have become economic. We know that the term of the hour of the day is about these sanctions that the entire world, well, the West, are going to be imposing onto the Kremlin. Believe it or not, the UK actually have a strong arsenal of economic sanctions that could cripple Russia, and that's because there is so much Russian money in this country. In 2020, I believe about £39 billion of funds that was generated here in the UK was shifted back to the Kremlin. There are currently about 33 Russian firms that enjoy dual listing. So they're listed in Moscow. They're also listed in London, a joint market capitalisation of nearly £500 billion. So that's how much Boris Johnson, the Prime Minister, has in his arsenal. We know that on the 10th of February, the Foreign Secretary, Liz Truss, was able to whisk through a new legal dealings in the House of Commons, which they will impose, we believe, as soon as today. We're still waiting for the Prime Minister to outline these sanctions to the rest of the MPs in the House of Commons in a couple of hours. What will they be? We're not so sure. As you said, some of these shares are going low. Not so low in London. However, they have been going low in Moscow. Some of those shares that we need to be looking out for oil and gas firms like Rosneft and Gazprom. At the moment, they're trading pretty well on the FTSE. It seems like investors are still holding their might. Also, as well, Russian state-backed banks like VTB and Sberbank, Norilsk and Nika, they are a commodities firm. Their shares dropped slowly earlier, but we just have to wait and see. I was hearing you speak about Nord Stream pipeline, the Nord Stream gas pipeline 2. We know that Olaf Scholz, the German Chancellor, has actually said he is going to stop the certification of that. So he's actually gone much further than everybody predicted last week. But again, it's a wait and see game. But sure, there is a lot of Russian money here in the UK, more than it is anywhere else in the world. But we know what this Conservative government can be like. A lot of Russian money is supporting the UK economy. Will they go further than they did in 2014? That's what we're all waiting to see, because that wasn't enough for them to stop rolling in the tanks overnight.
Right. I guess Putin has a lot to think about there. But how are other stocks looking in the market right now?
Mixed, actually. It was firmly down at early trading, but there seems to be some movement upwards at intraday. The FTSE All Share for now is down 0.01%, but the FTSE 100 is up slightly by 0.04%, and the FTSE 250, the domestic market, that's down by 0.39%. In currencies, the British pound is down on the US dollar by 0.21%, down 2 on the euro by 0.62%, and down on the Japanese yen by 0.01%. Worth mentioning as well, of course, gold is the safe haven that everybody is going to. There's a lot of Russian gold in London.
Quite interesting. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you.
All right, let's take a look at what's happening in Asia. We see stocks in Asia declined. Tensions surrounding Russia and Ukraine continue to keep investors on edge. Hong Kong's Hang Seng Index led losses regionally, falling 2.69% to close at 23,520 points. Hong Kong listed shares of Alibaba dropped 3.05% following reports that Chinese authorities have told banks and state firms to report exposure to Ant Group. Other Hong Kong listed Chinese tech shares also declined, with Tencent dipping 0.13% and Meituan plunging 5.1%. The Hang Seng Tech Index slipped 1.89% to 5,226 points. Shanghai Composite in mainland China closed 0.96% lower at 3,457 points. And the Shenzhen Component dropped 1.29% to 13,297 points. Nikkei 225 in Japan also saw sizable losses, closing 1.71% lower, 26,449 points, while the Topix index slipped 1.55% to 1,881 points. In South Korea, the Kospi fell by 1.35% on the day to 2,706 points. Australia's S&P ASX 200 dropped 1%, ending the trading day at 7,161 points. And the U.S., you see stock futures fell as traders continue to monitor tensions between Russia and Ukraine. Futures tied to the Dow Jones Industrial Average were down by 185 points, or 0.68%. S&P 500 futures also slid 0.72%, and the Nasdaq 100 futures were off by 1%. The U.S. stock market was closed Monday due to President's Day holiday. All of the declines were well off their overnight lows. See, Russian President Vladimir Putin said Monday that he would recognize the independence of two breakaway regions in Ukraine. So it's all about Russia, Ukraine right now, rattling all markets. Let's see what's happening with oil there. We see oil prices jumped as the crisis between Russia and Ukraine escalated. We see Russian President Vladimir Putin recognizing both states. We see in Asia afternoon trade on Tuesday, U.S. crude surged 3.72% to $94.46 a barrel, while Brent jumped 2.46% per barrel to about $97.73. Crude prices recently crossed $90 per barrel, representing an increase of more than 20% this year and a rally of more than 80% since the beginning of 2021. Those gains can also be attributed to other factors such as tight supply. All right, we'll take a break now. When we come back, commodities market update is next. Do stay with us. This is Business Incorporated. Welcome back. So today on Commodities Market Update, we'll be focusing on pineapples, a tropical sweet and sour fruit popularly consumed in fruit salads and juices. Last year, pineapple was granted as the Benin Republic's first geographical indication. And these geographical indications are internationally recognized legal labels that mark out products as coming from specific regions. Let's hear more now from Longi Defoe, analyst, financial derivatives company. Great to have you, Longi.
Good afternoon. Thank you for having me.
Yeah, so what does this geographical indication label mean for, pineapple production and trade in Benin Republic and Nigeria by extension?
So the importance of these geographical indication labels can definitely not be overstated. So just to give some context, globally, products with these geographical indication labels account for sales of about $83 billion a year. And apart from that, what we've typically seen is when products get these special geographical indication labels, they usually receive a premium of about 43%. And in cases of wine, over 300%. So just to give you some examples, think of champagne from France, Parma from Italy, and so on. So those are just some key examples. Now, pivoting to Benin Republic and what this means, it's definitely a very big deal for the country and their pineapple. So pineapple now from specifically the sugarloaf pineapple, which comes from Benin Republic, is going to be recognized as coming from that specific region. So it's going to be very good for the nation. It's going to be very good for trade. What we've typically seen is when these indications are granted to products, farmers usually receive a large amount, or a large increase in their income. And this usually translates towards overall economic prosperity for the country and so on. Just to close off my point, about 38% of Benin Republic works on farms. People in Benin Republic, 38% of them work on farms. So an increase in the price of pineapple would definitely translate towards a more economic development and prosperity for the nation.
Quite interesting. And, many African countries also seem to be taking advantage of these geographical indications, such as I've seen Cameroon, Kenya, already benefiting. What impact could these labels have on the wider Africa agricultural scene?
Yeah, so they're already having a large impact. Like you rightfully said, Cameroon's Penja peppers were the first products from Africa to actually receive these labels in about 2013. And since about that time, the income of farmers producing these Penja peppers have grown about sixfold since that time. So it's really quite a huge big deal. Now, we rightfully know Africa isn't really known for its manufacturing. Most of our strength usually comes from raw materials and mining and so on. So the institution of these special geographical indications, which you could rightfully term as intellectual property in some sort for food products, will likely lead to an increase in prices for these specific commodities and will likely lead to competitive advantage for Africa in the production of these commodities.
All right, but is Nigeria at risk of, being left behind here? And what prospects are there for us getting this geographical indication? What food crops do we have, that can actually, say, okay, this is actually from Nigeria?
Yeah, so definitely Nigeria is definitely at risk of being left behind, to say the least. Just to give you some examples, Nigeria actually does qualify for a lot of these geographical indications, but we are unfortunately not taking advantage of it. So I think of Ofada rice, Ijebu, Gari, and not just foodstuff. Think of Adire. These are specific commodities that come from Nigeria. And New Yam, Abuja Yam, that's also another one. These are specific commodities that come from Nigeria that do, in fact, qualify for these geographical indication labels, but then are not properly being utilized in the way that they could be. So, yeah, we're definitely at risk.
Quite interesting. But, Nigeria is the 8th largest pineapple, producing country in the world. We produce an estimated 1.5 million metric tons in 2020. But most of the pineapple produced and sold in Nigeria is for domestic consumption. Do you see, room for, pineapple to be grown into a major export commodity for the country?
It's possible, but I would say the main issue with that is that the species of pineapple which grows in Nigeria, specifically the smooth leaf and the yellow crown, aren't as in demand as other species grown globally. So I do think if it would be possible to pivot production towards those more in-demand species, it would definitely boost Nigeria pineapple production, because we have seen that Nigeria is, in fact, likely and capable of producing these pineapples. Unfortunately, it's just not being utilized, and production just isn't being diverted in the right way to achieve this.
All right, and I see India made about $3.26 million between April and December from pineapple exportation. That's good money. All right, Longida for Analyst Financial Derivatives Company. Thank you so much.
Thank you for having me.
All right, so moving on now to West Africa, we see commercial debt, largely from Eurobonds, constituted the largest chunk of Ghana's external debt as of the end of November 2021. See, data from the Bank of Ghana showed a commercial debt of $16.01 billion represented 42% of the total external loans of $27.89 billion and an increase of 3.38 billion Ghana cedis over the previous year. Was followed by multilateral and bilateral loans of $8.08 billion and $3.79 billion, respectively. Interestingly, both the multilateral and bilateral loans have been declining over the last couple of years. This might be due to Ghana's position of being a lower middle-income country. Meanwhile, the external debt of the country increased by 23.4 billion Ghana cedis from 141.8 billion Ghana cedis at the end of 2020 to 165.1 billion Ghana cedis as of November 2021. And Botswana's state-run diamond trader reported record revenue last year, with sales surging almost fivefold after U.S. imports recovered from a COVID-19-induced slowdown. The diamond company sold $963 million of rough diamonds last year, making it the most revenue received since the company began operations in 2012. According to the company, demand for natural rough diamonds remained strong throughout 2021, driven primarily by positive market sentiment in key markets such as the United States. Sales may rise further this year after De Beers, the world's biggest producer of the stones, pushed through one of its most aggressive diamond price increases in recent years. And Moroccan authorities ordered all the kingdom's provinces to ration water supply as the driest winter in decades hits the agriculture and tourism-reliant economy. The Interior Ministry instructed cities to enforce measures to address critical water situation. These include limiting water supplies, closing unauthorized wells, and sending water trucks to rural areas. According to the outlet that typically reflects the thinking, Morocco is bearing the brunt of the worst drought to impact North Africa's grain belt in 30 years. And we'll see $1.1 billion rescue package is being made available to mitigate its effects on agriculture, which employs 1 in 3 Moroccans. Authorities had initially limited water rationing to Marrakesh, a popular tourist destination, and the northeastern city of Uja. And Egypt's GDP is expected to grow to post about 7.9 billion Egyptian pounds by the end of the current financial year, 2021-2022, up from the 4.8 trillion Egyptian pounds recorded in 2017. The Egyptian pound recorded in previous fiscal years. This came within the results of the comprehensive review of Egypt's GDP, which lasted for 16 months. It was conducted by the Planning Ministry based on results of the 2017-2018 financial year. The economic census that was carried out by the Central Agency for Public Mobilization and Statistics and released in 2020. With regards to the sectoral distribution of the increase in GDP during the 2017-2018 financial year, the review showed that the majority of increase came from sectors of construction, manufacturing, education, health, and real estate. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.